GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior, with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick. He's a natural resource analyst at theuncommonwisdomdaily.com. Welcome back to the show, Sean.
Thanks very much for having me on.
What's happening in the metals market?
Well, we've seen a nice rally, and this is unusual because usually the end of March is a terrible time for gold. I mean, it's just seasonally, it just kind of works out that way. That has not been the case. We have seen a nice rally. That said, the stocks, most of them are looking a little tired right now, so maybe they're predicting that we'll see gold prices pull back in the near term. If that happens, that is a buying opportunity because the big trend is up. And so when you're in a big uptrend, you buy weakness, right? And so that's what we're looking at here.
What about silver?
Silver's leading gold. It was very nice this past week, and there are select silver miners that are looking really good. And now, of course, I always say silver acts like gold on steroids, right? Because it's, really overdoing the moves up and really overdoing the moves down. So you should get an even bigger pullback percentage-wise in silver than you do in gold, and that'll be great because you want to buy the thing that's really hot, right? And so when this kicks back into forward gear, silver's going to take off. Silver miners are going to roar their way higher. So look for those opportunities. It'll be great.
Oil's had a little bump up. Why is that?
Oh, well, that's because of Libya. Just when they think they've solved the interminable tribal warfare that seems to be ripping Libya apart. It is a failed state. Most people have to realize this now. And it's partly our fault. So there's enough for that to go around. And I'm not blaming you folks in Canada. So, frankly, it's that same group of shadowy men that seem to run everything. And I'm pretty sure Canada has a seat at the table, but you're too polite to say anything. But anyway, Libya is a failed state, and so they lose control of one export facility or another because certain people weren't paid off or because one tribe is mad at the other and all this stuff. And so, that takes Libya offline, and that's adding some support to the price of Brent right now. What people should keep in mind, though, is that Russian exports are going to increase, and even if the members of OPEC are able to finagle more cuts going forward, and I know they want to, it's almost sure that if prices do go higher, we'll see increased production from the U.S. shale oil fields that will just rise to meet that production. And U.S. oil exports are booming. And there's a good reason for that because, we are selling into that market. We have rising production. And so I don't think things will happen in a good way for oil going forward. We might see things stabilize. You never know. I mean, why not? Things could be stable in oil, but the risk is to the downside, really. And so until that risk gets worked out, until global demand rises enough to suck up the extra supply, that is really going to be a problem. So you can probably make easier money elsewhere. That said, there are always great stocks that outperform, companies that are positioned very nicely. We are seeing more rigs put to work in the oil fields, especially shale oil fields. And so the companies doing that kind of work, oil services, they could do well. But the big companies, they're probably just going to be flat for a while simply because of this big global oversupply picture.
Donald Trump is expected to ease emission standards for automobiles. Does that mean full speed ahead, or are we going to have coal-fired SUVs?
Well, obviously he thinks breathing is overrated. However, we have seen news from the Midwest, from Texas, places like that, that even though this administration is more coal-friendly, coal use is going down at the large power plants and like that kind of thing. Simply because, natural gas is just a much better choice for companies now. It just works better for what they're trying to get done. So, they can make all the laws they want, but really it's what works out economically for companies. I don't think they can lower the regulations on coal enough to take away natural gas's cost advantage right now. Now, things can change over time if the price of natural gas goes higher, and the price of natural gas is going higher. That's good for certain companies in the natural gas field. We're seeing that inch up at a time when the price of natural gas usually goes down. That's because the big oversupply that we had there for a while has been worked off. And so, if we have a long, hot summer, which some people are kind of betting we are, then we'll see demands on the natural gas stockpiles pretty quick. So, it's a certainly volatile energy market. I wouldn't bet on coal at this point, though I know some people certainly will, but really the winds of change seem to be blowing in the other direction.
What about uranium? Has so much been stockpiled with Japan's atomic reactors offline for such a long time that the prices just won't go up?
I keep hearing from my friends in the uranium field that, things will turn around any week now, and it hasn't happened yet. That said, I own uranium stocks. So it's not like I'm gonna shake a finger at like anybody and say you shouldn't be buying that. So certainly select names in this industry look dirt cheap. They do. And they can survive for quite some time at these levels. And when prices go higher, which you have to think inevitably they will, these companies stand to make a killing. So, I think that if you're looking for bargain basement opportunities, that is a place where you look, because eventually we will get that uranium rally. And so these stocks which have been left for dead will do extraordinarily well.
We'll have more with Sean Brodrick right after the break.
Exeter Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Sean Brodrick. American home prices are on the rise. Is that unexpected?
Certainly it's happening faster than people thought. Home prices rose at the fastest pace in 31 months, right? Up 5.9%. At the same time, we are seeing consumer confidence rise and, hit new highs. So it looks like the consumer in fact, the consumer confidence was the highest level since 2000. That's a long time. So it looks like the consumer side of the equation is looking pretty darn good right now. And I have to think that's really good for all sorts of consumer stocks. That's a place where I would look to put some money to work because, people are feeling good, spending money, and so you could do pretty well around there, I think.
Are there any credit reports? Are they putting it on their credit card, or because more people are finding work, they're actually paying cash for things?
It turns out more people are working. Demographics is a big part of it. Things are moving along. There's been some educational stuff. People were spending a lot of time in school. Now they're getting to work and stuff like that. So, actually, this whole thing to me looks inflationary. And I would bet you probably dollars to donuts that the Fed is not going to act fast enough because they're worried about killing the golden goose. So they will not hike rates fast enough. We'll see inflation come in, and frankly, the Fed wouldn't mind a little inflation when you get down to it. And that's good for things which are, help protect against inflation. One is real estate. Another one is gold. Those are two ideas. I mean, those are two things that tend to go up in inflationary environments, especially if the Fed's going to be asleep at the switch. You have to watch the real rate of inflation. That's like the 5-year minus the inflation rate, and that gives you the real rate of inflation. And I think that the yields, according to that, will still be negative, simply because inflation is accelerating and yields will not be going that high. So, it's a good environment for some things, for others not so much, but it's certainly good for consumers. A little inflation is not bad. As long as you're getting a raise every now and then, and things are moving along, you can actually do okay in that environment. It's much better than deflation. You don't want that, because that's when jobs get cut and stuff. So I'm not looking at this as a bad thing at all.
If factories come back to the U.S., what guarantee is there that they'll actually employ people instead of just robots?
I don't think there's any guarantee at all, and I'm not really sure factories will come back. There has been some movement, yes, but that was already planned. So we could see some more maybe, and you can certainly support this kind of thing. I like the whole Buy America thing. I think that's great. It's just that I don't think there'll be big swings one way or the other. I think that if we can talk down the threats of trade war and stuff like that, that's much better for all concerned. But if we happen to convince a few jobs to stay in the U.S., maybe bring in some, that'll be wonderful. Maybe we can get some jobs from Germany. They have bucket loads of money. So we'll see what happens there.
I know everybody's looking forward to tax cuts from Donald Trump, but if the same thing happens to his budget as what happened with his health care plan, maybe those tax cuts won't happen.
I think tax cuts will be easier for them, because the whole thing with the health care plan is they had nothing to back up their bluff, right? For 7 years they said, we hate this plan, we need to repeal it, we need to replace it and all that stuff, but they never worked on the replace part. And it turns out when they threw together a plan which you have to think was slapdash and last minute, it was a terrible plan because they didn't spend any time working on it. So, however, tax cuts, that's a little easier to do. And also since they had the failure on the first one, they'll be looking to make sure this one succeeds. They'll probably spend some more time working on people, working on the plans, actually laying the groundwork, because this is never easy, no matter what anyone thinks. This is actually very hard to get laws passed in the way that you want in Washington, D.C. But I think they're going to work on it, and so I wouldn't be surprised to see tax cuts and that kind of stuff move through. Now, the economic stimulus, rebuilding the infrastructure, that might not, because it all depends on what kind of tax cuts roll through, whether we get that or not. So that's kind of a $64,000 question, whether we get that kind of infrastructure spending. I hope we do, and we'll just have to see how that rolls out.
Well, also, too, tax cuts will stimulate the economy. You may not have to go and build extra infrastructure, especially if you don't need it.
Well, we need it. Our infrastructure hasn't been worked on in quite some time. Just terrible. And so I think that, we have bridges that are creaky all over the place. They just need to be replaced, stuff like that. So hopefully they'll get some of that done.
Is there any talk of public-private partnerships on this infrastructure?
Oh, yeah. That's how most of it will be done. I believe the Trump plan is to give big tax credits to help stimulate public-private partnerships. That's the last thing I heard. Of course, how it actually rolls out, that'll be anybody's guess, right?
Of course, here in the Vancouver area, where we have the world's widest bridge, the Port Mann, 10 lanes wide, it's a toll bridge, and people will almost canoe across the river or swim to avoid those tolls.
No. Well, that's the thing. When you have new infrastructure, you have to pay for it somehow or another. Tolls are usually the way.
Of course, in Japan, they have the world's most expensive toll highway, and nobody uses it. It's a huge money loser. You have to balance, don't you?
Oh, yeah. My daughter just got back from Japan. She had a great time there. She was there with her high school class. And so it was a real eye-opener for a kid who's just turning 18 to see how people in another country live. And you know what? I wouldn't mind importing exportees. Excuse me, I am using the wrong word. I wouldn't mind importing expertise from around the world to work on our problems either. I mean, other countries have worked on their infrastructure problems. They were able to solve it. For God's sakes, the U.S. should be able to do it too. If we have to borrow ideas from around the world, I'm happy to do that. Let's hope they do.
We'll have more with Sean Brodrick right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Sean Brodrick. Sean, is there anything happening on the agricultural commodities front?
No, I mean, there might be, but I've really been kind of focused on the metals lately, to tell you the truth. I mean, we just saw Exeter Resources get snapped up by like Goldcorp. That has a lot of people's attention, what's going on down there in Chile. By the way, if people are readers of my king1eye.blogspot.com blog, you know, I was at the PDAC this year, and I posted a couple interviews, 3 of them, from there, and one was on Exeter Resources. I've known that company for a long time. I've been down to their project in Chile, and it just was such an obvious takeover target. And so I have an interview with the CEO there. And so I think there are plenty more takeover targets. I think people should look at what's out there right now, because if the price of gold is going to go higher, and I strongly believe it is, then we have a bunch of big major gold miners that have pipelines they need filled. Even the ones that do exploration and do all the right things, you know, they're still coming up short. Look at Randgold. I mean, that's a very well-run company. It's in Africa, which is elephant country in more ways than one. That's where you find big gold deposits, and like their reserves still went down year over year. So they probably will have to buy more to fill that pipeline. And we know that here in North America, the large companies have just these big treasure chests of funds that they want to put to work. So this is going to be a very exciting time in the junior mining space. I mean, Exeter Resources, you know, they got paid like 2.5 times their market cap the previous day for what is a great gold project. I mean, I think it's a winner on both sides, frankly. But they're not the only ones out there. They're not the only opportunity. There are some excellent projects out there, and it's worth the while of the big companies to do this, because they didn't have to spend years and millions of dollars, you know, exploring and proving up and all that stuff. Instead, they can just write a check and take it, and it's just so much easier for them. And in these days going ahead, I think we're going to see a lot more of that. We are going to see these big companies write those checks, snap up those projects that work for them, they're in the right places. You know, geography is so important. It has to fit with what they have. But if it fits, then yeah, they will definitely be doing more of that.
Sean, I understand you're going to be visiting Vancouver soon.
Yes, I'll be a keynote speaker at the upcoming Metals Investor Forum on Friday, May 5th and Saturday the 6th in Vancouver at the Rosewood Hotel, Georgia. So if anyone listening to your show feels like coming on by, the Metals Investor Forum is a really good event, has some great people at it, smart speakers who are smarter than me, and some really good companies too. So this is the kind of time when you need to do this. I mean, I tell you, I came back from the PDAC with so many ideas that that I just wanted to act on. And I know that I'm in the minority of people who know about these companies because they haven't gotten their stories out. The Metals Investor Forum will be the same thing. There are going to be companies there that haven't gotten their stories out, and the people who attend the conference can find out about them. Now, I don't own the conference, so it's not a big deal to me whether you attend or not. But if not this, you should be attending other ones, because now's when you want to get your list of names put on a shopping list, that when things dip, and I'm a big believer in that, buy the dips. When things dip, buy those dips, have your names ready, have that shopping list ready, and so a place like this, the Metals Investor Forum, or ones like it, that's where you should be putting your shopping list together, because you're going to find some real bargains that most investors don't know about yet. That is the beauty of these kinds of things. So people should look for that.
And you get to talk to the CEOs and presidents of these smaller companies up close and in person, and you'll get information you could never find online.
Right, because it's not filtered. I mean, supposing these guys talk to the Globe and Mail, for example. The person who is writing that story has things they want to talk about, a certain storyline that they want to adhere to, and stuff like that. And I'm not saying that they're, meaning anything bad, but they might ignore things that an investor would really be interested in. And if speaking to a CEO or hearing that CEO speak, they can get the real scoop on it, and it'll really, hit their radar. That's why these things are so good.
Well, I can tell you, having worked in that particular business for most of my life, in fact, all of my life, is 1 page a copy is only something like 16, 17 lines. That's 1 page, 1 minute. And just with us speaking, we're over 20 minutes. Would you read a 20-page newspaper article about a mining company?
Exactly. I mean, it is just really boils down to how much time they have and how much they can actually spend on things. So it's not anyone's fault. It's just if you can get around that and work outside that box, it's a real opportunity for people.
So again, that's Friday, May 6th and Saturday, the 7th of May in Vancouver. At where?
Actually, it is actually Friday, May 5th, and then the 6th is the Saturday.
Well, I can't read a calendar. That's too darn complicated here, Sean. Sean, thank you so much for chatting with us.
Hey, it was my pleasure, and it's a great time for people to be in the markets. And so I think that you should, if you aren't in the markets now, make your shopping list. There will be another pullback, and that's when you can get busy. Don't feel you have to chase anything, but the opportunities are coming. So be ready for that, because it's going to be a great time to be in the markets going forward.
My guest has been Sean Brodrick from UncommonWisdomDaily.com. His blog, King1eyeblogspot.com. You're listening to HowStreet.com radio. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.